Welcome to Trading Nation. I'm Sara Eisen. Let's take a look at the retail space. The XRT retail ETF in the green for a fifth straight session. This ahead of retail earnings next week with names like Kohl's, Ralph Lauren, Tiffany all set to report. So is now the time to step in. Larry McDonald is with the Bear Traps report. Mark Tepper is with Strategic Wealth Partners. Larry, you like retail giant Walmart here, even though the market didn't necessarily like the quarter. Tell us why.
Well, a couple of things. One, we're obviously in a late cycle section of the U.S. economy. This is a very long run we've had, and staples, especially like Walmart, typically do very well. From say, you look at the last recession, 2009, 2010, Walmart was up, say, 15, 20%, and equities were down 40 during that period. So staples is where you want to be, but more compelling than that. And the real story here is Amazon's deal with the post office. There's an extremely high probability in terms of package pricing that there's an adjustment. There's a commission right now reviewing this in Washington. I've been down to Washington a number of times over the last month, and we've been doing a lot of work on the Hill. And this is a populist piñata. There's 450,000 jobs have been lost in retail. And what we've discovered is there's a $6, $7, $8 billion subsidy from the U.S. government that's been oozing its way over to Amazon. And it's been helping Amazon put a lot of retailers out of business. So both on the left and right, both not only from Donald Trump, Bernie Sanders, this is going to be a populist piñata in the second, third quarter of this year. Amazon's in trouble, and the retailers will win and will benefit from this political piñata.
And Walmart, you see, as the top one there.
Yes.
So, Mark, clearly not all retailers are created equally, especially right now. Lots of diverging fortunes. Which ones do you like?
Yeah, when it comes to retailers, we favor the companies like Nordstrom that actually have pricing power and a strong customer experience over the discount retailers like Macy's and JCPenney, who are competing more so on cost. So, you know, Nordstrom's a high-end retailer that really seems to be bridging the gap between your old school brick and mortar stores and today's movement towards more online purchases. And they've got a long-term growth strategy that's really strong. They're focusing on expanding stores and digital growth as well. You know, they've got their high-end Nordstrom stores, their discount Nordstrom Rack stores, and they're getting double-digit online sales growth at each of those respectively. Unlike other retailers, Nordstrom has really done a great job in the digital space because they're offering like free shipping, free returns, which makes it seamless for consumers to pull the trigger. And even Amazon doesn't offer free returns all the time. And one of the coolest things about Nordstrom is this new concept store, Nordstrom Local, which they opened in October in West Hollywood. Their typical store is 140,000 square feet. This particular store is 3,000 square feet. There's no merchandise, not a single article of clothing there, just coffee, cocktails, iPads, a stylist, and a consumer experience. And it's really this strong consumer experience that enhances customer loyalty. And if you don't evolve in retail, you die. And Nordstrom has shown that they're evolving, so we like that stuff.
Everyone's trying to figure out the experience part of retail. Larry and Mark, thank you very much for joining us.
Thank you, Sarah.
And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.